All right, thank you for joining. Today we will go over Ethereum USDT on the Binance chart. And we've seen Ethereum sell off for quite some time, and we've now entered a period of consolidation. Now, since we are towards the bottom of that consolidation, I would not be surprised to see Ethereum try to attempt to at least get back to around $3,200, which is the last area before the last big dump that brought it down to around $2,700. We can see here we've had two very bullish days, today and yesterday. Today will close above the last downward bearish candle, which is very bullish because it in reality turns this area into a bullish order block, which is pretty much support. Now, Ethereum will be looking a lot more bullish, aiming for around 3,200, even the previous month's high, to be honest. 3,500 is the main target there on Ethereum, as long as we stay above this $3,000 level, right? Now, if we zoom out a little bit more, we can see that Ethereum really has not done much since, you could even go back to maybe 2021, right? We've been in a massive range for the past 4 to 5 years. I know it's hard for people to believe, but at the end of the day, since January 2021 up until now, Ethereum has traded in a range between, let's just say, $1,000 to $4,800. So when you think of these cryptos as like an auction, right? Like you're gonna go to an auction for a car or anything else, and you see a specific car that you like, there's gonna be some of those cars that sell at a certain price on the low end, and there's gonna be some cars that sell at a certain price at the high end. And this is just what you're seeing here, just the price being recorded of an asset over a period of time. Some people were lucky enough to buy that asset down at the lows, which is $1,000. And some people were lucky enough to sell at the highs just shy of $5,000, right? So the market does not think Ethereum currently is worth more than $5,000, right? So with that being said, it's just been in this massive consolidation. Right now is pretty much just the average price, not in terms of volume. In terms of volume, the highest traded price was 1,700, right? So that's where the most transactions occurred, was around 1,700, $1,800. But in terms of excluding volume, if we're just looking for the highs and lows, right, we could go ahead and pull a Fibonacci from the lows to the highs, and you'll see that it is pretty much right there at the 50% mark off this entire range, right? Just letting you know, right now it's pretty much the fair price. If people bought high or bought low, this is just a fair price of where it is right now. And it just makes sense that it does have some consolidation around this level, right? You can see that it consolidated around this level quite often, right? So it's consolidated here, sold off, came right back up, tried to attempt to go higher, consolidated at the middle again. So it's liking this area. And with that being said, when you do get these spikes to the upside, you kind of want to, some people might say, oh my God, we're going to $7,500, $10,000. But history has not told us that that's what the market is valuing Ethereum at. So at the end of the day, once it gets up here, not financial advice, but it makes sense to try to load off some of your bags. That's what a lot of the institutions did. They saw historical price data saying that the highs for Ethereum was valued at around 4,800. So anyone selling off at these highs was extremely happy because they knew the higher probability was that price would go down from these levels. And that's what it did, right? It dropped from 4,800 to around $3,000. So if you think like that when trading, most of the time you will be on the right side of the market because it is just an auction. People buy low and they sell high, right? That's the aim of the game. So as you can see here with Ethereum right now, it went towards the low end of this range. So obviously people are going to be seeing that as a discount and buyers are going to want to step in, and they're going to want to aim for the highs of the range, right? Go ahead and hide this. And the high of the range is sitting at around 3,500. So in reality, once again, even though you have this overall high price target here, and at the past 2 months, buyers and sellers are agreeing that Ethereum is valued between 2,700 to 3,500. So when it gets back to this level, what's the smartest thing to do? In my opinion, I would look to go short, expecting that sellers are going to step in again, and you'd want to put your stop loss above the highs. If price does break out higher, then yes, there's more buyers willing to buy Ethereum at 3,500, meaning that where's the next area they're probably going to look to offload. And in my opinion, it might be around this area, 3,800, just because that's where a lot of selling pressure came in. But the overall target at this point should just be all-time highs if you start to break out of this level, because that's where massive selling pressure came in, right? Like that's just where you start seeing this selling pressure is really around these highs. So if we break out of 3,500, I would be looking to target $5,000 for Ethereum. But if we do manage to trade above 3,500 and fail to maintain these levels and start trading back in, then for sure I would then be targeting the lows once again, which only makes sense, right? Because sellers would be in control and price is going to go where buyers are the most interested, which would be at $2,700. And of course, if that level is lost, then we look to where the next area of interest was, which was around $2,000, psychological level. So price would get down to 2,000, expect buyers to step in to push price up. And it's just a never-ending game of buying and selling, looking at the auction, and making your decisions based off of what the chart is showing you, right? Sometimes it's just best not to overcomplicate things. The reality of the situation, the market tells you exactly where buyers stepped in, and they tell you exactly where sellers stepped in. So when you take that into consideration, it's also telling you where you should pretty much be looking to buy and where you should be pretty much looking to sell, right? And it's the same thing with anything you look at. We can go to any other crypto, SWI, for instance, same thing, right? Let me go ahead and get rid of this. So looking at SWI, USDT on Bybit, same concept. You have a low, you have a swing high, letting you know buyers are willing to step in around this $1.30 range and sellers are willing to step in at around $2. So right now the market has priced SWI between $1.30 to $2. So at the end of the day, if you were to go long here, just based off of the, range theory, right? You are definitely in a discount compared to the overall local range. And even if it takes a few more days, I would be expecting price to move up from here, targeting at least 50% of the range, but then overall rotating to at least $2. And if you see price below this range, sweeping up some liquidity, also not financial advice, but good area to consider going long, and then target the top of the range. So that's all you have to do. Look at the ranges and make your decisions based off that. Buy in a discount, sell at a premium. And it happens on a lot of other cryptos too as well. You can look at XRP. Same thing. So XRP is trading at a discount of this overall range, right? Let me go ahead and hide some of this stuff here. All right, so yeah, looking at XRP, it is trading currently in a discount off the overall range, right? So buyers have priced XRP between $1.82 to $2.50. That's the current range. And once again, when you go ahead and pull your Fibonacci tool, you can see it's right below the 50%. So fair value of this range would be at around $2.13. So buyers that step in here know that they're getting a good price based on the last 2 months of data. And they would probably be looking to offload at least at $2.12, mainly at $2.42. This simple strategy on any range could save people a lot of money. Very straightforward. If we even go up to here, right, and we do the same thing with XRP. Just look at this range. That's the low, right? That's the high. This one would have been a little bit more difficult, but still, you'd pull your Fibonacci. You'll see that anytime you were to enter along at these lows, right? Even if this low is a little bit harder to see, let's just say you used this low, right? With XRP, once you have your levels pointed out, if you were to enter long, once price became close to these lows, offloaded at the 50% at least, you would hit that roughly twice, right? You'd get a long in, price comes out, you're in profit, offload when you're close to that level, aiming for the top. It didn't quite get there, but you move your stop losses to entry. Even if this happens, doesn't matter, you break even with a take profit already. So this like range theory discount premium trading is actually very smart. A lot of people overthink it. But right now, like I said, XRP is looking more bullish than bearish. I'm expecting at least $2.10 in the next few days. But if we don't get that push up, yes, expect price to go a little bit lower. And I wouldn't really expect much lower than $1.75, because that's just where we have proof that buyers are willing to purchase XRP at those levels, right? Institutions. So they probably have a lot of limit orders down here just soaking up anyone panic selling. And then we can do the same thing with any other project. Let's look at ADA, Cardano. Sure, it's the same exact thing, right? Let's go ahead, hide all of that. So yeah, when looking at Cardano, we go ahead and mark out our ranges, right? So this was the low. Even if we just use this low, right? It's a little tricky, but let's just say we use that low. And we used this high, right? We can see the market has valued Cardano right now between 33 cents to, I'd actually rather use this high. So let's use around 48 cents, right? And I say that high because this is where support came in, price came down, it went higher, got rejected basically off that level. So we'll use that high 48 cents to roughly 33 cents. So the market has priced Cardano between 50 cents to 35 cents over the past few months. Right now it is trading at a discount. So if you were to buy here, you can at least expect Cardano to move up to 50% of that range, which sits at about 40 cents. And what does that mean in terms of percentage? So if you were to long here, you're looking at possibly 12% gain. Yes, your stop loss would probably have to be down here, which is also 10%. So it's like a one-to-one trade. Not a terrible trade. You just have to manage your risks, right? So that this way you're just trading with 10% of your overall account. And that's just how you would really want to manage your risk in terms of risk management, right? So one-to-one trade, stop loss below the lows. Aim for the 50%, that's still 12%, and walk away a happy camper. And this range theory, in my opinion, is just very simple, very straightforward. Look for the most recent high time frame highs and high time frame lows. Mark out their midpoint so you can know if you're buying at a premium, which is up here, or a discount, which is down here. And then you just trade the ranges until they break. That's all you have to do, right? We can even go ahead and take a look at Dogecoin, right? This is another one. You can see right now the low of the range is $11, well, 11 cents. We can even say, 11.5 cents, where the high of the range sits at roughly here, 15 cents. So market has Dogecoin priced between 11 to 15 cents. We have evidence of sellers stepping in at 15.5 cents. Evidence of buyers stepping in at $11.05, well, 11.5 cents. So right now, based on the range we are in, we are currently trading at a discount. 50% would be 13.5 cents. That looks like exactly where Dogecoin is heading to. Right, I could zoom in for you. And what does that mean in terms of a long trade here? That means that if you want to target the high of the range, you're looking at a 24% gain. If you want to put your stop loss below, 7% loss. So risk reward is around 3-1. So that's actually a good risk reward. If you're targeting 50%, it's just about a 1-to-1 trade. So still pretty good as long as you manage your risk, right? So Dogecoin still looking pretty good. I would expect the lower prices to come first before moving up. But in terms of just trading in a discount or premium, you are buying at a good price based on this range, right? Not financial advice, but if I was to buy this, I'd be buying at a good price based on this range, expecting these highs, or at least the very minimum, this 50% to get tested again, which is just a clear target, lets you not panic sell. Once you start getting some momentum, you move your stop losses to break even, and that's pretty much it, right? So that's pretty much it for this Ethereum and altcoin overview. Very straightforward. Remember to like and subscribe. Follow me on X. I try to post updates. I've been diving into stocks a little bit more often. Nokia, I'd be expecting a pullback to this area, $6.50, which is like a gap liquidity void area. Also in a discount as well to target the highs. So like and subscribe. Leave a comment below of a project you would like to see me chart. And that is pretty much it in terms of these charts here. Thank you for joining. Take care. And until next time.